Good morning, traders, and welcome to today's edition of the London Session Open. Today is April 11th, 2019, and my name is Alejandro Zambrano, Chief Market Strategist with ATFX in London. Today we're not doing a live webinar, we're doing a recording. Hopefully we're going to be back live probably early next week. But what we're going to do now is going to take a look at the markets. But before we start, as always, I need to stress the trading financial markets, unfortunately, is high risk, and we may lose all of our invested money. Okay, so let's kick off with the euro. It's not a lot of activity going on here. There's activity in other markets, sort of platinum, some metals. That's where we'll be looking at then. Maybe even energy markets. As for the euro, there's not a lot of activity at all going on here. And the trend remains bullish about 111.75. However, there's not a lot of action here at all. I think as long as trade below 111.75, the market may potentially go up to 113.23, maybe 113.14, sorry, 114 eventually. But my preference is really just a short sell or a break to 11.75. And I don't do ranges because for me, they don't really work out and it's mostly just a waste of time and money. As for GBP versus the USD, there's not a lot of change here either. The trend remains bullish about 129.52. May go upwards eventually. People don't know when exactly, but eventually. As it looks right now, the UK is going to have an extension. I think it was 6 months or so. Halloween, that's when they need to make up a decision. Of course, could be extended again. Like these sort of negotiations, they take years. So I don't anticipate any major sort of change. And if they go through with this, it's probably going to be relatively quiet, I think, for a few weeks, if not months. And then eventually Labour in the UK and Labour and the Tory party are probably going to come back with some sort of ideas on how to move forward. But it could easily be a bit quiet, sort of behind the doors, behind closed doors sort of conversations. And then when they have something ready, they'll present it. So for now, I remain bullish and trends bullish about 129.52. As for the dollar versus the Japanese yen, is trading within that range. Been stuck there for ages. I'm talking about 109.70 and 112.17. Not only that, if you look at it from a big picture perspective, we are consolidating, as you can see here. So there's not too much to do until we break 112.17 or 109.70. Now what you want to do is you want to take a look at other dollar yen pairs, or other yen pairs really. You find them that are far more interesting from a technical point of view. Because if we just break out here, you have the next major high here, which is unfortunately just means that we're probably going to go up and go down, and it's going to be a bit sluggish until we have a breakout. When we have a breakout, we'll have some big party here. I think you have this triangle, but it could also be viewed as a funny looking head and shoulders, with this being the head left and this being the right shoulder, with a break to the upside here, potentially costing the price to maybe go up all the way up to 127, 124 eventually. As for gold prices, they're also consolidating. This is a big range. You're looking at data from 2016, and the market is going slightly lower now, which I think is fair. We said maybe 1310. We went to 1310.66, so 0.50 here on this price, and you're probably gonna head a little bit lower now. Now, what I prefer is the break to 1280. Take this level out, and we can probably go lower. We're dealing with the head and shoulders here, which suggests we can go substantially lower. And I think this makes perfect sense as well. Continuing here, this is crude oil prices. I cleaned up the chart. Starting to get a bit messy. We hit 2 targets and continue to move upwards. Hit this 3rd level that we highlighted here. You can see the price is pretty much at the levels seen in August 2018 and June 2018. The market itself is a bit extended. We may continue to trade towards the next support level or resistance level, which is the 29th of October high at 68. That's October last year. And I suspect, people probably gonna look to buy. As for the biggest and most important level is this one here, because this is the sort of major trend finding level at $58 per barrel. Now I took a fib from this low to this high, gave me these 3 fib levels, and around here I suspect people are gonna look to be buying. Now as well, if we go all the way down here, we go back to these lows, that's good. But if we go all the way down here, we're gonna go back to the breakout point. So the market really should be not trade much lower than this breakout point here. If it does, it's probably an indication that the market has turned around. So that's why I have my trend finding level at 59.77 instead of down here. by lifting it, we also automatically get a better risk reward ratio. I would assume we're gonna go down and then target those highs again, and then maybe go up to 68. As for the S&P 500, you got yourself a triple top now here. Take that out, probably go a little bit higher. So if you're scalping and things like that, I think that could be something. I'm not a big fan of scalping anymore, so I'm not trading those opportunities. So I'm looking for that pullback, the same pullback we had here, okay? So I'm bullish, but I want to see that pullback. As for the German DAX, it's looking really interesting. You have this massive head and shoulders pattern, and remember, I've been bullish here for quite some time, and I've been ridiculed on Twitter. Thankfully, it's just one guy, and it's not being ridiculed, but sort of conversing in comments that no way will this go upwards. Well, look, we are higher. I've seen a lot of those over the years. People sort of being stubbornly bearish. Not really sure what's going on in their lives for them to be all that bearish all the time. The default state of the world economies is growth. Why? Because it's in the human nature to want to improve. It's in the human nature to want to be able to make, get more resources, more money. To give you an idea, especially in, well, I think across the world really, since thousands of years. So as long as people are greedy and selfish, we'll have higher economic growth, and with that, corporations produce better. So the default state is higher stock markets. We just need to remember that, unless human nature somehow is going to change. Now, going forward here, I still think we can go upwards, but in the short term, as I said yesterday, we're probably going to go down a little bit and then potentially upwards. And that, guys, concludes today's market update. So sorry for not doing a live webinar today. Main reason is just having technical issues, but we might be live on YouTube, maybe here tomorrow. If not, we'll go back to webinar. Guys, if you have any questions during the day, you can email at alejandro.zambrano@atfx.com. You're also most welcome to reach out to me on my Twitter at alexfx00, and as well as you can see there, the small ways of contacting me. Okay, guys, thanks so much for watching. Happy trading, and I think of all these pairs, maybe German DAX is looking far more interesting right now. There's other stuff brewing as well. Just need to be on the lookout and not just focus on the main pairs. If you have any questions, let me know. Thank you.